Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, March 28th, 2023. It's now 6:47 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 has printed the combo and sequential buy setup one count. And to negate that for end of day today on the 29th, there must be a close below 3936.97 for the price flip to the sell setup count 1. Price in the pre-market hours for the S&P 500 at 6:57 a.m. Central Time on the 28th is 3976. So the S&P 500 should start the day with the sell setup count 1 price flip, and it won't take much to get the conversion line above the baseline. So a decent updraft would probably do that, and the only level in danger of becoming qualified for today would be the trend factor down 1 with a close below that level. We'll turn lines on now and take a look at those for qualification. And at the pre-market hours, price for the S&P 500 around 3976. It's pretty close to opening above this ongoing supply line, which for this morning will be at 3978.46. And if it does not open above that level for the supply line today at 3978.46, and then subsequently closes above that level for end of day today on the 28th, this supply line will become disqualified, and the relative retracement disqualified up 1 at that level has been resistance for the past few days. Get above that and close above these levels here for the ongoing supply lines. This one for today is at 4025.06, and the next one right above it is at 4030.47 for end of day today. So there is pretty good resistance to the upside for S&P price. And then conversely, there's pretty good support as price is above the Ichimoku baseline and conversion line, which looks like it's imminent to have a crossover with the conversion line above the baseline, which would be a good thing. The CBOE total put call ratio charts KST is having its torturous trek downwards as the S&P 500 large caps are having their torturous trek upwards that I've been talking about. There's only a handful of big fat cap megatech stocks that are carrying the day these days. Nonetheless, let's see if it can tiptoe its way below the zero line here in blue, and then continue its torturous trek downwards maybe to this line again. The New York high-low chart shows the 5 EMA in blue having second thoughts about hooking around to the upside. Rock 12 just about hit that 89.29 negative red line down here and turned around. And the high-low index itself in dotted here has turned around to the upside, but that 5 EMA has yet to catch up and hook around. The short-term KST has a pronounced hook around to the upside here. It's trying to get to its signal line. The intermediate term and long-term KSTs are not doing well, below zero and headed straight down just about. The NASDAQ composite high-low chart shows a more pronounced hook around, and that's only because Everything in the NASDAQ 100 NDX is in the NASDAQ Composite Index, so that has more of a pronounced hook around. Same thing with its ROC 12. Here you can see the index of the high-low is really going straight up, and the NDX NASDAQ 100 high-low chart is looking the same as it has for the past week or so, just headed straight up. And you can see the indexes themselves over here. In orange is the NASDAQ 100, and in black is the CompQ NASDAQ Composite. And you can see they have really separated from each other. You can see for the most part they stay together, but now they've really separated, and you can see the torturous climb they're taking as the NASDAQ 100 and 20 or so of the constituents in there carry the days. And the short-term KST for the NASDAQ Composite high-low has gone above its signal line. It's below zero, but nonetheless above its signal line. And the intermediate term KST is getting closer to its signal line, but still in a downwards trajectory. And the long-term KST is pretty much headed straight down, miles away from its signal line. The S&P 500 support and resistance levels big board chart shows the gray areas at the monthly 12 simple moving average, 21 EMA, 50 EMA, 100 simple moving average, and S1. And price in the pre-market hours for the S&P 500 at 7:43 a.m. on the 28th is approximately 39.69. And to the immediate downside is the weekly Bollinger Band mid-band 39 period, 20 simple moving average, daily baseline, daily conversion line, and S2. To the immediate upside is the relative retracement up 200 EMA and R1. And the daily S&P 500 AD line is just a couple of points below its 21 EMA signal line, as is the NASDAQ 100's daily AD line below its 21 EMA signal line by a point. And this is the third day in a row where the ROC 1 was staying right around zero. It's at positive 0.16 and pointed down right at zero basically. ATR2 has simmered down. It's at 53.70 and pointed down, and the neutral zone is at 50. So it's getting close to that, but the PPO extreme is right around 0.2. It's a little bit under negative 0.36%. And here's a milestone. The New York traditional McClellan breath oscillator to get back to zero would require 505 decliners over advancers to get back to zero. So that's the first time in 2 solid months of trading days that the McClellan breath oscillator has been above zero. So this is the first day yesterday. So let's watch this daily ongoing supply line. It really needs to open above that to get qualified, any chance at all. It would need to close above it too, of course, but if it doesn't open above it and closes above it end of day, then it will become disqualified and a possible fading opportunity. Have a great day.